S corp basically. I do some agents who are S corps. They assign their income to the corporation and then draw a salary from the corporation as an S corp. Does anybody here do that at all? Yep. Okay. There's a couple here that do that. The only problem you have there, well, several things you got to be aware of. The government wants you to have an adequate amount of salary, so you can't take out all your money just as non-salary deduction because you own the business, assuming that no one's working in the business and money's just falling out of the sky. The government says, somebody's working, we want some Social Security tax on somebody's income, so we've got to have some reasonable amount of salary that you do. But you're able to draw some money out as distributions and thereby reduce your Social Security tax accordingly through use of a subchapter S. So I'm glad some of you use that. It's a little bit more complicated to do, requires additional tax filing, some payroll tax returns, but can save you a decent amount of Social Security tax on your net income by dividing it between the personal services performed along with the ownership factor that you can draw out dividends because you're an owner, which are non-Social Security taxable. Anybody got any questions about that? Because only a couple of people are doing it. Great technique. Going to cost you probably, I don't know, $1,000, $1,500 a year to make it work with the additional tax return and a few other. There's a few costs in there. Yeah. But at the same time, you're saving more than that by the reduction of the Social Security tax and those kind of things.
Well, I'm a little different though because it's a separate company I have, so I'm not doing it as AFLAC. But
okay.
Yeah. But yeah, it's about right.
Yeah. So then limited liability company, which can be set up and operated either as a proprietorship or as a corporation or as a partnership. Requires an operating agreement. Gives you some, again, protection from the government. I'm moving through these things pretty quickly unless somebody's got a question. A lot of these apply to a lot of the businesses that you see and you go out and sell to. So I'm kind of giving you an understanding of what goes on with them also.
Is there, excuse me.
Go ahead.
Is there a particular structure that's best depending on income?
Well, I don't say best, but there are differences in them. If you're making very little in income, then you don't need to incur the $1,500 cost to set up this matrix to make this work. If you're making, the more income you make, the more that benefits you because of that underlying cost. So it's more of the amount of level of income you're making. So if you're making more than, oh, I don't know, say $30,000, $40,000, then you can save some money with the S corp filing. Although there's some negatives to that too that I'm going to talk about in just a minute. One thing the IRS is really hot to trot after nowadays is worker classification. So what they're doing is going out to businesses that's saying, oh gee, these are all subcontractors, when they're really not subcontractors, they're employees. And they want to pay them as subcontractors. In your case here, what you're drawing is a pure commission. So therefore, you're working when you want to, you go see who you want to. I know that the duck kicks you in the butt and try to move you down certain roads sometimes, but in general, you know, you're in control of your own destiny here. And therefore, you would be a subcontractor, non-employee. If you have someone who's working in your business, working for you, you tell them where to go every day, they're working in your office, that's not a subcontractor, that's an employee. And the government's really aggressively going after people that want to claim their employees and make them subcontractors now.
Run into that a lot when people want to keep them 1099s.
Right.
Yeah. Especially, I think auto garages seem to be doing it a lot.
It's everywhere from auto garages to, I mean, I know some offices that try to treat their secretary as a 1099 person, which is totally bizarre. I mean, certainly won't be the case.
We run into a lot of that cold calling.
Yeah, I bet you do.
Again, especially since PACA came up, nobody wants to pay taxes.
Right.
I mean, insurance anymore.
Right. Well, they'll tell you, gee, these people aren't my employees. You know, you got to deal with them directly. They're not my employees. You know, there's no AFLAC needed in here because I don't have any employees. So, clearly and quick. Now, generally, I tell people, ask me, well, I've got my secretary on 1099, you know, I want to leave her on 1099. I say, that's great. As long as you don't get caught, it's like anybody. You know, if you ride down the road 100 miles an hour and there's no policeman, well, then that means you didn't do it wrong. It just means you didn't get caught. What happens is, in most 1099 cases, you know, you got your secretary out here, pay her as a 1099, then one day she screws up and you fire her. Where does she go? Unemployment office. I work for that sorry SOB. You know, I want my unemployment now. Well, he doesn't show it that way. They'll come out and stick it to you. I mean, it's horrible. So 90% of them get caught because of when they just depart their employment, either friendly or unfriendly, and they go to file unemployment. So how most people get caught. It's not the IRS that catches them, it's the State Department of Labor. What am I doing here? Suddenly froze up on me here. Oops, I went somewhere.
This time you've gone too far.
Gone too far, huh? And then I've got another one here talking about the subcontractor, again, the limitations. They want, of course, the government would like everybody to be employees, so there's withholding on everybody, and we don't have, they'd like all of y'all to be employees of AFLAC or whoever, so I mean, they certainly like that. And they push through certain laws sometimes to do that, require withholding even on subcontractors. Really what they want, they don't care if you're an employee or not, as long as there's withholding and they're getting their money quicker and the taxes are paid is the main thing they push for. Let's talk about record keeping. Now this would apply virtually to all of y'all. Basically, when they talk about bookkeeping, they talk about, well, the government, if they come in and check you, they want to see numbers on your tax return reply back to receipts. And so therefore, there's several ways to do that. We're big into QuickBooks. We do QuickBooks support. We have QuickBooks Pro advisors on staff that teach people QuickBooks. At the same time, technically you're not required to do that. It's just a matter of, if you've got so much down there for entertainment, they want to see the receipts that tie back to the entertainment. And when you're dealing with entertainment, they want to see, you know, who you entertained, why you entertained them, where it was, how much it was. So they want to see, you know, a series of factors on entertainment. I think there's another slide on that. But again, the main thing is keeping a register. Sometimes, I'm sure this doesn't happen with AFLAC at all, sometimes you'll work for me for the whole year and I'll send you a 1099 that says you made $9,000 and you'll say, dang, I know I only made $5. What's he sending me one for $9 for? So then you've got to go back and say, well, gee, add up what you really got paid to make sure that your 1099 is correct. Because there are errors made in 1099, so you want to be sure that you're tracking that. I suggest people, they go out and they get a bank account that they use just for business. Doesn't have to be a business name on the account, still can be your personal name, but the only thing that goes in that account is business income. And the only thing that comes out of it is either expenses, then you take out a draw every now and then, move to your personal account to pay your bills. So I tell people to get one bank account and one credit card. Now again, the credit card can be in your personal name, I don't care. But don't put anything on that credit card except for business expenses. Now if you do that, one trick that happens there is the interest you pay on that credit card is then tax deductible within your business. Because these are business expenses, I borrowed to make business expense payments, interest is deductible. Whereas on a standard credit card, it's not deductible. So you certainly want to try to segregate that credit card. If you're not going to pay a credit card, don't pay that one because the interest on that one becomes deductible, whereas the interest on your other one is not deductible. Generally, what we're looking at here is records. They can audit you 3 years at a time, so the slide says keep your records for 3 years, and that's 3 open years. It really turns out to be more like 4 years, because as of right today, they can audit you for 2008, 9, 10, and 11. 3 years they can audit you for. Well, here we are at the end of 12, so you got to have your 9 records still. Till you file your 12 return, then you can get rid of the 9 records. So I tell people 4 years they need to keep their records that they can go back to. Keep 3 years after or 4 years after you dispose of something. Keep employment records for 4 years. We're big into QuickBooks. There are a lot of other ones out there. Quicken works well, just something that accumulates the numbers. You can sit down at the end of the year if you want to. Well, back in the old days, most of y'all here look younger than me, so I hate to talk about the olden days. The olden days, we used to get checks with bank statements. I don't know if anybody remember. Some of y'all remember those days. Mm-hmm. You can just take them at year end, stack the checks up, and add them up, put ad machine tape on it. Here's the checks for my rent, or here's the checks for my stuff, and that's records. Today, they don't send you checks, or they send you those little bitty microfiche one or whatever, so it's much more difficult to do it that way. They expect you to be doing it in Quicken, or to at least doing something in Excel, or something to accumulate and add up the receipts that then go back to your tax return. But again, QuickBooks works great if you wanted to use QuickBooks. There's a lot can be done with that. wouldn't apply directly for y'all a whole lot. Okay, we're going to talk about deductions, and one of the ones that come up, especially in y'all's case, is home office. How many here claim a home office? I should see almost all the hands go up. Good. You claim a home office if basically a few things happen. Back prior to '93, IRS was auditing virtually everyone that claimed a home office. In '93, they lost the case. And Congress rolled back around and said, oh yeah, some people do have a legitimate home office. Let's let them deduct it. So they've been letting them deduct it basically since '93. So what you're supposed to do is have a space in your home that used nothing but for business, and that be your primary location. Like if you're working out of this office, if they're going to assign you the office over here for you to come in and work, well, that's your primary office, not the one at home. Most of y'all don't have offices here. You're working out of your home, therefore you can claim office in the home. You take the percentage of square footage of your home, divide the square footage of the office by the square footage of the home, take that percentage and multiply it by all the expenses of operating the home. So it's a great deduction, pretty simple to do. The one thing about the home office deduction, then your mileage all becomes deductible from home, because that's your home location. You're not required to go to an office first and have that not be deductible as commuting, and then travel somewhere for an office use. So, yes?
Is that not still a red flag for an audit?
No.
Because it even says it on TurboTax when you're doing your taxes. If you put this, 25%, get audited.
No, I don't. We probably put it on. We do about 1,000 returns. We put home office on 100 of them, and I've never had one of them audited for that. Prior to '93, that would be true. Not since then.
Okay.
If you're operating a business that needs a home office, then you can have a home office. If you're operating one that you have a location somewhere, so the problem you got if you're doing it on your kitchen table, you don't have space exclusively for the office, so you can't claim it. You've got to try to decide something that's exclusive. But I don't hold back on claiming it. Now, one thing about TurboTax, people say, look, I do my return on TurboTax. TurboTax is great as long as you understand every question and answer it correctly, you'll do the correct return. The problem you get into trouble is you don't understand one of the questions and you guess at it, or you think they mean one thing when they really mean something else, and therefore you get mucked up because of the fact that you and TurboTax are not on the same page. And that's when you need to hire someone else to do your return. It's when TurboTax is not really answering a question or responding according to that question. See, I'd say TurboTax is wrong with that.
Okay, well, let me ask you this. What kind of a percentage of savings do you get out of that?
Generally, the savings is, actual tax savings is $200 or $300.
Okay.
And it's not a huge thing, but heck, that's money to me. I mean,
I think it's the driving thing is killer.
yeah,
That's the most important thing.
Mileage is huge.
mileage is huge, yeah. And again, so they want you to keep, I'm down here talking about, I'm going to go back and talk about salaries to kid in a minute, but let's talk about the automobile now that he brought it up. Basically, the automobile, back in, gosh, life just fades way back in there somewhere, like '98, they passed a ruling that said everybody's going to keep a log of every mile they drive. Boy, everybody raised holy hell about that, I tell you. And so they backed off. And now they say you don't have to have a log of every mile you drive, but you've got to have a contemporaneous log of where you're going. And that's basically an appointment calendar. So as long as you keep an appointment calendar and you can reconstruct the mileage, then you fulfill the IRS's requirement. So that's when they talk about a log, they're talking about an appointment log is really what the law requires of you now, not a mileage log. And my appointment calendar is on my calendar. I got an Outlook calendar, and there's where I'm going and stuff like that. And if I get audited, I'll be able to go back to that calendar, see how many miles that was away, and compute my mileage.
You mean just by the business name, or what do you mean?
Well, the business name, the location, wherever I'm going. So, you know, like today, I've got the address here. So I'll be able to go back to my office calendar, see how far away it is, and come up with my mileage.
So that's all that's required?
That's all that's required. It's a contemporaneous calendar is what's required. And I've been through audit on that many times and won it every time. So I've had no problem with that one. Let's talk about salary to kids for just a minute. Now some of y'all are young enough in here to have kids at home. You know, it's the greatest days when you have your kid and you kick them out of home. I mean, those are the two greatest days of your life. You know, I mean, it's then they don't come back with more kids. I mean, that becomes a problem too. But anyway, if you you can employ your child at age 7 to do something for you. You pay them up to $5,000 to do it. It's tax-free to them, tax deductible by you. You just saved about $2,000 in taxes by employing your child. Now you can employ your 7-year-old. I can't employ your 7-year-old because of child labor laws, but there's no child labor law on a parent. And the child is exempt from Social Security tax if working for a parent. So if you paid me, you have to do Social Security withholding me on that $5,000, cost you about $700 or $800. The child under age 18, there is no Social Security tax. So the $5,000 saves you.
Somebody got a new job.
And you're exempt from unemployment tax. You're exempt from unemployment tax, Social Security tax, and the first $5,000 they earn is exempt from income tax. So it comes off of your income tax as a deduction, goes on them, and if they're under $5,000, that's all their income. They don't even have to file. So it's a pretty sweet thing. Now you do have to find something that your child can do. You know, there's been, again, I've been audited on this for 30 years, and I've won every case. The only time you wouldn't win it is you've got your 7-year-old. You're paying them $50,000 a year to do something. I don't know what you pay your 7-year-old $50,000, but they're going to say no 7-year-old's worth that much. But you pay them to clean out trash, help you with mailings, do stuff that they can do. You pay them a few $1,000s to do that. One thing I like doing with that too is teaching your 7-, 8-, 9-year-old what money is, how to manage their own money, what to do with their own money. My daughter took she was a competitive ice skater. Well, she paid for her own ice skating lessons with the money I paid her. Started paying her when she was 7. Now I paid her all the way, I actually paid her all the way through college because she paid for her own college with the money I was paying her. I had to pay Social Security tax when she was above 18. But when she was above 18, I paid her $20,000. She paid her all of her college expenses out of that. She got the education credit, about $2,500. I took a tax deduction for the $20,000. I think she paid about $800 in taxes on that $20,000 as a result of the deduction of the tuition credits and things she's got there. So that worked out great. Now those are the kind of things that we try to help our clients do to cut their taxes, but staying within the legitimate. Again, we got to find duties that their 7- or 8-year-old child can do for you. The court case of the 7-year-old child was working for their parents in a trailer park picking up trash. And the court said, yeah, the 7-year-old can pick up trash in a trailer park and should be compensated for doing it. So again, you want to have something that your child can do and not be paying them $100 an hour to lick envelopes for you or something like that. So again, it's a matter of being reasonable. The thing we have there too is that pigs get fed, hogs get slaughtered. So you want to be a pig, not a hog. And so you want to, get whatever you can get. Oh, yes, sir. Oh, yes, sir.
I'm behind you, right?
Okay, go ahead.
And is that for each child or?
Each child. $5,000 for each child is totally taxable.
So if you have a house full of children, you can deduct all your.
Well, again, you gotta have things they can do. You gotta have things they can do for you, and they could be making calls. They can be, doing envelopes. They can be doing web stuff for you to help find clients. There's a lot of things they can do, and you've got to be showing that they're doing these things that are reasonable. Yes, sir.
And what's the oldest you can make that deduction on?
Age 8. When they turn 18, you can't. You got to start paying Social Security tax. But I paid my daughter all the way through graduate school to 25. So there's no age limit. It's a matter of having something they can do that's reasonable within their set of skills. My daughter does websites. Susan, did you ever hear my daughter speak?
Yes.
Yeah. She does websites for people, does social media marketing, teaches people how to do that. And so all through her 20s, that's what she was doing for me. I was paying her to do it. So all within reason of her skill set. So, but again, we were doing it after 18, we were all doing it for college, because then the $20,000 I paid her, she used to pay college tax deductible to me. And she had the tuition credits on her return to offset her taxes, so she ended up paying no tax on it, and I got fully tax deductible. Pretty sweet little deal. So, any more questions about that? Because that's a pretty nice little plum sitting on the bush that you need to reach up and get if you've got kids. Grandkids doesn't work, it's kids. I shouldn't say grandkids don't work, because grandkids, let me talk just a little bit about grandkids because it's more complicated.
Okay.
In order to do grandkids, I've done this sometimes. Let's say, for instance, you want someone to do all your social media marketing for you. Well, what happens is, and you've got 2 grandkids, so you pay $10,000 to your daughter. She turns around and has a little business in which she makes $10,000, pays $5,000 each one of the kids, and it's totally deductible by her. So she washes through her return, goes to the grandkids, non-taxable. See, it gets more complicated time you get include more people in the matrix of it, because you've got to have skill sets that can perform this duty for you, and make sure that they are performing a duty. But again, they should be paid for what they do on a reasonable method. The retirement plans, I've got retirement plans up here, and lots you can do with retirement plans. I'm going to vary from that a little bit. One thing that I do in my retirement plan, I actually buy real estate within my IRA. So you can do a lot. You could do hard money lending. You could buy tax liens. A lot of things you can do in your IRA that the standard investment vehicles won't tell you because they don't sell them. So a lot of things you can do with a retirement plan. Get a nice tax deduction for it up front. The meals and entertainment, again, you've got to have 5 factors down: who, where, when, why, and how much. Okay, there's the 5 factors. So you take me to lunch, and basically you've got on your calendar shows who you are. The receipt from the lunch, I always put on a credit card, shows where I was and when, and why is your relationship with me. I'm your accountant or whatever, and how much is on the credit card receipt showing that you bought me lunch and it cost about, well, it depends on where we go. $10 or whatever, so I'm cheap date. But so that would be what you've got to have proof for when you're doing either meals or entertainment. Travel, very similar thing there. It's just a matter if you keep it in a calendar, you can keep that. You're not required to have a receipt unless the expenditure is $75 or more. You can have it in the calendar. So you're able to do that there. Computer. Most people deduct their computers now. Certainly the cell phones are getting real popular. Until about 2 years ago, the government required you to theoretically track your cell phone usage. Nobody did it. So they finally gave up the ghost and said, we're not going to require you to track your cell phone usage anymore. We're pretty much going to give you a cell phone if it's in the... Before that, they wanted to know if you had 300 minutes in your cell phone. You're paying $1 a minute. They want to know who those 300 calls were to, and what they were, and percentage plaque, and again, they backed off from that, thank goodness, because that was driving us crazy, and it was wasting their time dealing with nickels and dimes. There's what it was. I think I get close to the end. I don't. Oh, I am to the end. Oh, I went through this mighty quick.
I have a question.
Sure. Go ahead. Back to kids. I've got one fellow with 15 kids. Dealing with them, and anyway, go ahead. Tell me about the cell phone.
The cell phone. Okay, I have a family plan. So what do I do? This divide mine out, or?
Yeah, you should be dividing yours out. That's what you're supposed to be doing. Yeah.
Well, since
Supposed to be
the plans have like a $10 add-on line charge, can you take off the bulk and just?
Yeah, it'd only be the add-on for having the additional phones.
So yeah, so if you have additional phones, it's like
Yeah.
$10 or $20 to add a line usually.
Oh,
You just
okay.
take out the lines.
It's your daughter that's using 2,000
Oh,
data
wow.
minutes a month.
Yeah.
That's going to drive you crazy.
Exactly.
But I mean, yeah, it's the incremental cost of having the additional lines would be the non-deductible part. It wouldn't be pro rata of the whole. It would be that incremental part.
What about the gifting to your class?
This is one of the stupidest rules still with the IRS. The limit is $25. Stupid, because you can't buy squat for $25. Most IRS agents will not enforce that, but the limit is $25 per client. I mean, you can't send flowers to somebody's funeral for $25. I mean, it's really a pathetic rule. Yes, sir.
For kids, whatever you employ them doing does not have to be related to your business?
Oh, it would have to be related to the business, sure.
Oh.
Yeah, oh yeah.
Well, you gave an example of a kid picking up garbage in the trailer.
Well, that was a parents' trailer park that the parents were renting out spaces in.
Oh, okay.
They all manage their stuff.
You're not going to be able to pay them to make their beds and stuff like that and come as a business.
Cut the grass? Oh, man.
No.
Unless they're cutting the grass in your business.
Well, in home office, you get a percentage of home office use, but you wouldn't get to deduct the whole thing. That's what you would do if you were cutting grass.
Okay.
Oh, so what you're saying is, what you just said,
Mm-hmm.
you can hire somebody to come by $55 a month to cut your lawn and you take a percentage off of that?
Sure. any cost of operating the home. If you end up, a lot of people end up, if you got a 2,000 square foot house, people end up with maybe a room 10 by 12 or 10 by 15. If 10 by 15 is 150, that's 7.5% of the whole house. So 7.5% of every cost of operating the house. Cutting the grass, all your power, utilities, gas, all those things, you get 7.5% of it on your business as a business deduction.
Okay.
Yeah.
Since I actually pay for this physical space, this office, I can't deduct from my home.
No.
Is that correct?
No, because you have an office here.
And I don't. That's just clarifying.
At least that's what you're telling us now. I understand. But no, if you have an office somewhere else, then you're not allowed to have two offices. Interesting case just came down of a preacher that had two homes, and one became both as his residence for patronage purposes, which they get tax free. And the court said no, you only have the one home. So it's the same thing with only having one office for your.
Well, let me get clarification on this, because the agents pay towards the copier and phone lines.
Right.
They can still deduct a home office if they're paying towards equipment use.
As long as they don't have space here,
There's no,
then they can still claim that. Yeah, sure.
That's how we've always done it.
And it's not uncommon. You charge them some kind of administration fee kind of thing. Yeah, that's no problem.
So that's also deductible for them.
Oh, sure.
And then so is the home office. So
Right.
keep that in
Yeah.
mind.
Yes, ma'am.
What kind of support would they need for that as far as documentation?
For what? The
To
kids?
show, no. To show that if you pay office rent or something like that, would you need some form of documentation to put that on your taxes?
Well, what I suggest people do, no, when they audit you, they want to see the floor plan of your house, and I bring them a little floor plan, draw it off with the various rooms, and come up with a percentage that's
I'm
off
just
and home.
saying, if you pay for office space somewhere else and you can't do your home office deduction, what do you need as support?
Just a lease, and that's what you're doing. Now, if you're paying for a room in my house as your office, there might be a problem. But as long as you're paying for a properly zoned space somewhere, then I've never seen that really questioned either. I mean, again, certainly you can have another office somewhere. It's generally the office in the home that they begin to argue about how much space you use, and you want to have pictures, and if you get audited, you want to have pictures of the space showing that it's office and there's not bunk beds for the kids in the office space and things like that. So you need to be sure that you're talking about dedicated space.
Does that answer your question?
I think the question is, okay, we pay for copy and phone use here. Do we need Dan to type us out something that we pay him X number of dollars?
Well, you gotta get check bureau.
Well, I mean, you should have an agreement with Dan of some kind. Does he just come up every month and dream up how much to bill you?
It's a deduction from your paycheck, so I mean,
It
they
comes
have
out
it.
of our
all.
end of the month check, so we don't actually physically write him a check.
Well, in your agreement somewhere, there's an agreement to pay this, I would assume, is there not?
I'll sign something.
There's a form.
Yeah, there's a form, see? So that would be really it, that you're, obligated to pay this or whatever. So that would really be all you need. I've never seen them really question that either. They realize that paying for some kind of administration fee is acceptable.
Now maybe we should do something, because the verbiage does say rent. They don't have physical space.
No, I wouldn't call it rent. I'd call it administration
Administrative,
fee.
maybe we
Yeah,
could just
management
change
fee,
that.
administration
Yeah.
fee rather than rent.
Yeah.
Now, do they pay you or they pay a corporation? Who do they actually write the check? Or it comes
We
out of
don't.
their
Comes
money?
out of their pay
Okay.
directly to me. I mean, because we pay for all the everything, and then they just contribute a
Right.
small portion.
Right. Well, the issue you would have there, if you wrote him a check and wrote it to him individually, then you'd be required to issue him a 1099 if you wrote him more than $600 during a year.
AFLAC cuts me the check.
Yeah. So AFLAC's required to give him some kind of
Yeah, I
accounting
get
for that.
1099 by AFLAC
Yeah.
on that stuff.
Yeah.
So you guys should be able to deduct it, and then I pay the taxes.
Yeah, with the
from
AFLAC, but
check
you're
being
supposed
cut
to
from AFLAC.
you're supposed to report as income the gross amount from AFLAC, and then take the deductions, which are the amount which are charged for various fees and things of that kind.
We just need a new agreement saying
Yeah,
administrative
we
fees
should
and
change
stuff.
that to
Yeah.
verbiage.
Yeah, it shouldn't be rent, doesn't, that's, because it's really not rent.
No, it's, I mean, but that's just the
I understand, yeah.
simpler.
Now, IRS is stepping up their audit things. I've had a couple of audits, in fact, I've had 4 or 5 audits lately, looking specifically at 1099s, who's getting 1099s, who's not getting 1099s. They're starting to audit the 1099K. Does anybody know what a 1099K is? It's the new 1099 to give for credit cards. So if you pay me with a credit card, I'm going to get a 1099K from Visa telling the government, and they're going to tell the government that you paid me with a credit card.
I didn't know you could do that.
Oh, I heard about, yeah.
Yeah.
Everything you're not supposed to, yeah, there was something that came up about 2 years ago.
Yeah, about 2 years. It's part of Obamacare when the this new credit card tracking mechanism was put into law.
Yeah, I thought that was just baloney.
The initial thing was quite crazy because they wanted you to issue 1099 for everything.
Yes.
Under the law that originally came out, I had to issue a 1099 to Georgia Power for selling me power. And they finally backed off of that. I mean, that was just asinine. Well, I'd have to issue one to
Best Buy for buying electronics.
Yeah, well, or if you bought a table from Home Depot or Office Depot, they wanted you to issue one to Office Depot for buying a table. I mean, you know, Big Brother would like to know everything you do. That one of the things they've wanted to do for years is do away with cash, so it's all done with debit cards, and they'll be able to track it all down. You know, most of you, I'm sure, heard on the news that they're doing away with checks for unemployment now. It's all going to be either direct deposit or issued a debit card. And the same thing with Social Security checks. They're going to do away with Social Security checks. Either going to give you a debit card or else direct deposit's what they're going to do.
Hey, Chip.
So they're slowly trying to gather more and more data on you, so that it makes it easier for them to see what you're up to and come and get you.
And I want to address one other area that I'm unclear on, but in our business we get something called chargebacks.
Sure.
Which we're all
Yeah, if someone cancels their insurance, you get charged back commission. Sure.
And it was brought to my attention yesterday, and explain what you explained to me, because I'd like to get clarification on that.
Chargebacks is basically we go in, we receive, and it's possible for us to receive commission, be paid in the previous year or even this year. They go in, they cancel the policies, and we're charged by the commission, and we can take that off as a deduction.
Right.
So when you get a chargeback on your statement, that you're still getting 1099 on all of the income that was earned, even when they take it back.
Right.
So
you got to write that off as a chargeback.
That you need to actually go in and you can reduce your taxable income.
Because what AFLAC has done is quite common with the insurance companies. They pay the commission really before you earned it, you know, because they pay you kind of up front, and then if there's a later, you know, canceling, then there's some commission that's technically not earned, and they want that money back.
But they don't reduce your 1099 when they take that money back.
Right. Right.
That's why you say, my goodness, I earned that much, where'd it go?
Commission off of what I just said.
Actually, could you,
you got medical insurance up there, does that apply too?
Let me talk about medical in general a little bit. There's a couple of little kinks in the law that are a big opportunity for you. Basically, the law allows you to pay for, if you want to, you can elect to pay for all medical expenses of all employees. Okay? So you tell the employees, I'm going to pay all your medical expenses, all your copay, your dental, your glasses. I'm going to pay everything you have. And well, who are your employees? Well, let's look around. That just happens to be your 2 kids, and maybe you put your spouse on payroll so that you get this. And the law allows this to cover spouses. So what you do is you employ your spouse, and then you happen to be the spouse of the spouse, and therefore that spouse can request reimbursement of the expenses that you have. Now, you can't pay your expenses as you, but you can pay as the spouse of your employee. So, you go get, this allows you to fully deduct braces on all your kids. Your kids may have perfect teeth, so I don't know. Braces on your kids' teeth, you know, glasses on everybody, but again, the only trick here is that it's got to cover all employees. Now, if you go out and hire somebody else, and you mucked it up because you got to pay all their medical expenses too. But as long as it's your kids and your spouse, and you're your spouse's spouse, then you end up getting all that deducted on the Schedule C, on your business return, not on the medical part on Schedule A. It's on the business.
Do you have to have a certain determination as the type of business you are to do that?
No, it's a proprietorship. Again, as long as you do all employees.
That's great.
Right, that's great. Yep.
You've got some good secrets.
Now, TurboTax probably didn't tell you that one either, I'm sure.
No, I don't recall seeing that.
I stopped using them for that reason, because everything is something you can get audited for, and then it finally got to the point where it lets you take nothing.
Well, yeah.
I was like, okay, forget it.
And it's Back a long time ago, I was actually an instructor at the IRS. I taught them how to do audits, and I was a classroom instructor, and that was back in the 70s, before most of y'all were born, I'm sure. So it's forever ago. But so I know how they think. I know pretty much how far we can push them, and the legal things, the paying to the kids, the medical expenses, the home office, all these things that are legal. As long as you cross your T's correctly and dot your I's correctly, then there's nothing improper about it. Because the loopholes are there in the law, and you just got to make sure you get through the loophole.
Now, as far as like as you age, also, and you are really sole proprietorship, you more or less really have to look at being in that area, how you're writing your business off if you're showing zero, you know, you made no money after everything happened that year, and it affects your Social Security check.
Oh, it can,
For
yes.
the last few years that you're doing that, you have to be extremely careful. You need to be paying some of it.
Well, if number one, if you have a zero net income, you can't claim office in the home. It says you can only claim office in the home if you got a profit. You can get your profit to zero. In other words, if you end up with a net income of $1,000, you got $1,000 of office in the home, you can claim that much, but you can't claim anything over there. The same thing, certainly if you're between 62 and 65 now, there's a limit of $14,000 earned income you can have. So your Schedule C, if that's your only source of income, can be up to $14,000, but if it's above that, it starts to reduce your Social Security. When you're 65, I think it's around $30,000 is the limit that where it becomes unlimited at 66. So there's a lot of things that affect older people. One thing that they're doing next year as part of Obamacare, the medical expense on Schedule A, they're now putting it up to 10%. It's been 7.5% for 40 years that I remember doing it. Now they're going to make it 10%. So you reduce 10% of your gross income off of your medical before you claim a deduction. Well, that doesn't apply to people over 65. They still get 7.5%. So there's a lot of little complications in the law which we're yet to fully understand or absorb. And the same thing with all the Obamacare rules and regulations. There are just tons of stuff there that, until recently, we all thought it was going to go away. And after the Supreme Court ruled and then the election, we know it's not going away. So now we've got to figure out, well, what's going to happen to us? And it's going to affect, I assume it's going to affect AFLAC too in some way. I don't know. A little bit. Because a lot of it impacts on a lot of people.
You may not have heard too much on this, but what we've been encountering is people are saying they're not going to pay health insurance on their employees. They're going to pay the taxes.
The penalty.
The penalty, I mean. Now, are you hearing a lot of your people saying that, or do you have customers that are?
I hadn't heard that much of it yet. That goes into effect in 2014, so we've still got a year to get through that. But what's funny is if I don't have health insurance on my employees, they're still required. So I pay a penalty, and then they got to have health insurance of their own, or they'll pay a penalty. So there'll be a penalty on me and a penalty on them both if they don't have health insurance. So, but it certainly paying the penalty is cheaper than paying the health insurance.
That's right.
So it's going to be interesting to see how this evolves over the next 2 or 3 years.
And also, I'm encountering some employers are Longhorns. Well, who owns Longhorns? And they announced one morning at 6 o'clock that any future employees they were hiring were going to be part-time. They were hiring no more full-time employees because they were not paying health insurance. If you were there, you were grandfathered in, you would get health insurance if you were already getting it. But any future employees from that point, they were not getting health insurance because they were going to be part-time. And I recently called an account I cold called on in Norcross. She said, Susan, we're going to have to, now we're all part-time, we have 15 left on the bill for the health insurance.
Right.
And I helped her with her class, and she's going to try to get me in there with AFLAC. But we were told that AFLAC is going to go with the flow. Our business should not be affected by the Obamacare because people are still going to need.
Oh, they still need it. They still need regular health insurance
That's
too.
right.
You can't assume that because the employer takes away they don't need it. They still need it. So I don't know how it's going to evolve, and maybe I'll start offering more stuff because of the other people don't have it. I don't know. But things are changing is all I can say.
Very much so, very much so.
Yes, ma'am.
One of the things that we've been doing, and it might help you guys, where they're saying they don't want to do anything because of all the changes. We had people that wanted to wait till after the election. They were thinking they were gonna get out of being able, or having to offer the major medical. We explained to them that you can do it or not do it. We're offering them a way to take advantage of the tax savings so that they would cut down the price of the health insurance by about 20%. But we also were explaining to them that if you don't offer it, then your business pretty much becomes a training ground for businesses that do offer it. They're gonna stay with you a while, your turnover is gonna increase. So in the long run, they still spend more money retraining people. And once they start looking at it that way, they got a little bit more open to at least taking a look at it. So I got some people I have to follow back up with, and we just sat and waited on them, you know, until the election was over. Because even if the election went a different way, they still would have had to do it because it was still a law, and it takes too much time to turn it back around.
Yeah.
Don't answer
So
that yet.
didn't make any sense.
All right,
But a lot of things are going to change, and I'm sure some of them will have impact, maybe positive impact on AFLAC. I don't know until we see how the state rolls out their insurance plans that the state's going to offer. I mean, a lot of things are going to change. We'll just have to wait and see what comes down the road. And then there's certain types of insurance you've got to apply, but you can't do other types. I mean, there's so much that's just a blur out there. It's really going to be hard to tell. It'll take us another year of evolution here. Now we know we're going to have it to see exactly what's going to happen.
I aged just perfect into it.
Anybody else got any questions? Or yes, sir?
I've got a question that doesn't have anything to do with personal, but there's a business that the IRS has a law that says that certain highly compensated individuals in that business can only make up a percentage of the overall participants in the insurance program.
Yeah, there's the Cadillac plan problem. The Cadillac plan problem says that health insurance is more than, I think, $1,000 a month, $12,000 for the year. Then they're going to penalize them because they're giving them too good insurance. So now you got to penalize for too bad insurance, and you got to penalize for too good insurance. And in the insurance industries, and I don't think this applies to AFLAC, but they've capped a lot of the executive salaries in insurance, and some of them can only be paid $500,000 in certain. I think that's health insurance companies where they can only pay $500,000 to the top executives rather than paying them more than that because they think they're giving too much money and not giving enough back. So it's I know you're going to cut your salary. I can see that coming in today. But
what's happening is I've ran into a business where everyone there is, except for one, is considered highly compensated.
Mm-hmm.
So the purpose of the law was to prevent discrimination against the lower salaried people.
Mm-hmm.
In this case, there's only one that's lower salaried, and they're allowing that one to participate just like they want all the others to participate. So the letter of the law defeats the purpose of the law.
Oh, it does in lots of cases. Yeah, there are exceptions.
So are there? That's what I want to know. Are there exceptions? Can we find some?
Well, I don't know. The exceptions are
get this company.
Possibly there are possibly going to be some loopholes. I don't know. I mean, but you go back and read the law. I remember reading the law a long time ago, and there was a law that applied to everybody except for if you were docked at Dock 14 in St. Louis Pier on this day, you weren't subject to the law. So, I mean, there's all kinds of stuff like that in the law that accepts, you know, give certain exception. I know that they were talking about Waffle House that applied for an exception from Obamacare because they got so many lowly paid people and got an administrative exception, so they don't have to come under it until, I think, 2017, so they're not under it in 2014 or something.
Doesn't that only affect businesses over 50 though that have to pay health insurance?
Mm-hmm.
Isn't it companies over 50 employees have to pay health insurance?
50 full-time equivalents. So meaning that if you got 2 20-hour people, that's one full-time equivalent. So yeah, but it's 50. If you got above 50 in 2014, you're going to have to provide health insurance or be penalized. Am I stunned all of y'all?
Taxes are so expensive.
I thought it was great.
That was great.
Taxes are, they're always a change. No doubt about it.
I appreciate all the time.
Again, if y'all want helps with the kids or something, we're there to do it, and we're going to save you all that money and stuff. It's pretty easy to do if you cross the T's right. You just got to cross your T's right, and you're home free.
Did you bring
Did you bring your
cards?
business cards?
Sure, I've got some somewhere. Oh, God.